Hi, I'm Ashiki Rahman from Accounting Celebrity. Welcome to my channel where I upload accounting tutorials weekly. So today in this topic, I'm gonna show you how to prepare a partnership current account. This is the second part. In the first part, I've shown how to prepare profit and loss appropriation account. Okay. So here today I'll show you from that account you prepare this current account. Okay, let's get started. Okay, so first of all, we'll know what is a current account. Then we'll prepare this current account from an example question. Okay, so here before we get into this video, I'll recommend you to watch the first part. If you don't watch first part, many things you will not understand. So for you, I'm going to put this link here in the I button. You watch it, then come back to this lesson. Okay, so here, what is current account? If the capital accounts are fixed, a separate current account is prepared for each partner. The partnership's current account then records the changes in the capital of each partner, and these changes can be caused by share of profit or loss, drawings, interest on capital, and interest on drawings. When the current account is balanced, it may have either a debit balance or a credit balance. A debit balance indicates that the partner has withdrawn too much money or goods in anticipation of expected profit, and a credit balance indicates that company owes the partner. A debit balance in a partner's current account will be shown under the current asset, while a credit balance will be listed as a current liability in the statement of financial position or balance sheet, whatever you call. Now the question we'll do today has two partners. Okay, one is Sumit and the one is Dio. Okay, so we can do this current account for both the partners together, or you can prepare the current account separately for each partner. Okay, so today I'll show you only the current account for Dio, the partner. Okay, so here let us write first of all current account, and the partner name is here Dio. Okay, so here in this column we will record the date, here the details, here the amount means dollar, same thing here the date, details, and here dollar. Okay, this is credit side and this is debit side. Okay, so what items will be included here on the debit side and what items will be included on the credit side? Here first of all we have to write the balance PD. The current account balance will be given in the question clearly. So current account has different types of balance. Sometimes it will have debit balance, sometimes credit balance. Okay, if it is a debit balance, will be written in the question clearly debit balance. If it is a credit balance, still will be written credit balance in the question. Okay, so simple thing, debit balance will be recorded on the debit side and credit balance will be written on the credit side. Okay, don't forget on the debit side only two items will be included, sometimes three items. Okay, which two items? First of all, the drawings. Second of all, the interest on drawings. Okay, sometimes in the question, in the profit and loss appropriation account, you may have share of loss. Okay, so if there is share of loss, in this case you have to record the share of loss on the debit side. Okay, now what items to be recorded here on the credit side? First of all, we have to write interest on capital, then salary, commission, any types of expenses. Okay, and then we have to also record the share of profit. Okay, these are the items will be recorded here on the credit side. Okay, so let us have a look at the question on the screen. On 1st January 2015, the balances were as follows. Here the Sumit capital account is 100,000, due is $150,000. Current account Sumit is $2,100 and due is $6,900 credit. Okay, so I told you the balance, whether it is debit or credit, will be clearly mentioned in the question. Here Sumit has credit balance and due has debit balance. So today we are doing due account. Okay, so we'll think only about due. Okay, then what is written in the question? The following further information was available for the year ended 31st December 2015. Okay, profit for the year was $64,000. This is already taken in the appropriation account. Drawings are given. Okay, Sumit is $19,000 and due is $12,000. Okay, So think about due, we'll take this amount. Okay, then interest on drawings are also given. So Sumit is $1,800 and due is $1,200. Okay, very good. Now what is the requirement here and the question? Prepare dues current account for the year ended 31st December 2015. Balance the account and bring down the balance on 1st January 2016. Okay, so you have to remember the accounting period here. The business started on 1st January 2015 and the year ended on 31st December 2015. Okay, so this is the accounting period for this business, for this partnership business. Okay, so here we are required to bring down the balance on 1st January 2016, means next accounting period. Okay, now let us include all the information related items here in the current account. Okay, so first of all we'll write the balance BD. Okay, due has a debit balance, so I told you if it is a debit balance you have to record on the debit side. So let us write here balance BD. BD means brought down. Okay, so here $6,900 dues opening balance. Okay, now what to do, I told you we have to record here more two items. One is drawings, another one is interest on drawings. Okay, so what is the drawings on the question? Have a look at here. Sumit drawings is $19,000 and due is $12,000. Okay, so let us write here drawings, the date first 2015 and on the last day of financial period, which is 31st December 2015. Okay, so we'll write here drawings, $12,000 drawings. Very good. Then what to record? We have here interest on drawings on the question, so we have to record that one also. Same date, December 31st. Interest on drawings, it is $1,200 interest on drawing given. Okay, very good. So three items will be recorded: drawings, interest on drawings, and share of loss. In the question there is no share of loss, there is profit and loss, which will be recorded on the credit side. Okay, so here first of all we have to record interest on capital. Yeah, so let us write here 2015, the last day of the period, December 31st. It is interest on capital. So interest on capital is not given in the question. Okay, but it is written in the question that interest on capital is paid at a rate of 10%. So in the question, what is the capital? Capital was here for DO, it is $150,000. Okay, $150,000 times 10%. Okay, what we get? We get here $15,000. So this amount is already taken in the profit and loss appropriation account. Okay, so that is the reason I told you to watch that video, then to come here. Okay, very good. So then what to write? We have to record the salary. Okay, is there any salary for due? Let us have a look at the question. Sumit received the salary $7,000 a year from the partnership. That means Sumit receives, not due, so we will not write here salary. Okay, so now nothing to write, we have just one item which is profit share. Okay, so let us write profit share on same date, December 31st. So right here profit share. So now we have to look at the profit and loss appropriation account. Okay, so there we calculated profit share. Sumit got $21,000 and Dev got $14,000. Okay, so let us write here $14,000. So these are the basic items you have on the partner's current account. Okay, so if you can remember these items, it will be very easier for you to prepare any kinds of current account given on the question. Okay, so now what to do? We are required to balance it. In the question it is written that we have to balance it. Okay, to balance, first of all we have to compare this debit column and this credit dollar columns. Okay, so if we compare these two columns, which column will get larger in money, in terms of value? So if we see that we get the credit column, so if we add these two values we get $29,000. Yeah, 15 plus $14,000 equal to $29,000. Now we will take this $29,000 here on the debit side. Okay, the opposite side means the debit side, it is $29,000. Very good. Now what to do? Now we have to subtract this all three amounts from these totals. Okay. So if we subtract, what do you get? $8,900. So what is this value called? This is called balance CD. Balance CD means balance carried down. Okay. So the date for balance CD is same date, the last day of the period, which is 31st December 2015. Okay. Then in the question we are required to bring down this balance on 1st January 2016, means next accounting period. Okay, so go here the credit side, and under the total we have to write this balance PD. So it will be 2016 January 1st. So we have to write here balance BD. Okay, the value is here same, $8,900. So this credit balance means the partnership business owes the partner $6,900. Okay, and this will be taken in the liability section, current liability section of the statement of financial position. So in the beginning of this tutorial I told you that we'll do only for dues current account, but here we have two partners, one is Sumit and one is Dio. So I did here Dio. You try to do Sumit by yourself at home, practice properly, then you can learn. Okay, and point to be noted, if you think that you will do both the partners account together, okay, so you can make $2 columns here one for Dio and one for Sumit. Okay, same thing here, $1 column is for Dio and the one is for Sumit. Okay, so side by side, if you make $2 columns, you can prepare the current account for both the partners together. Okay, so this is all about our today's lesson. I hope you understood and you enjoyed this lesson. If you think that this video is helpful for you, please share with your friends. Let me know, comment below what you want to see in my next video. And please consider subscribing to my channel, because there are so many accounting tutorials which will help you to learn accounting, to understand accounting, to prepare yourself for your exam or test. So that is all. I'll see you soon with a new video. Until then, bye bye and take care.